Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, I'm going to talk about NIO stock, so ticker symbol NIO, which is a Chinese electric vehicle company, so automaker in the EV sector, which as we know is very hot at the moment. The market cap is $55.6 billion and this is what has done in the last 5 to 6 months has been crazy, from $2 to now around $40 per share. And obviously the hype behind these stocks is something huge. When you go to YouTube, you have videos about NIO. Everyone is talking about NIO. So NIO to $300, NIO to $400. Everyone is giving an incredible stock price predictions. So what I'm gonna do in this video is to just try to give a price prediction and try to understand the fair price of NIO with some real numbers. So not just throwing numbers like random, but trying to do it with a little bit of logic. The only thing I ask you guys, as always, leave me an early like. It's very important for the video itself and for the channel. You help me to reach more people and I thank you very much about it. And if you want, subscribe to the channel so you don't miss any new updates. And let's begin. So first of all guys, one thing that we have to point out about NIO is that the stock is literally going parabolic. And look at that. This is quite clear to see from the curve. It's going up in a parabolic move. Now, do I think that this is sustainable? In my opinion, not. But that doesn't mean that NIO is going to crash and go back to, but it means that a pullback which has just begun, I don't know how long will it last, but it is very something that it's healthy for the stock price, okay? Because in my opinion, if you really like a stock for the long term, it's not very healthy when it goes up like that forever, because then there is a lot of hype, a lot of volatility, and people can get scared when the stock pulls back. So you're gonna see a lot of volatility. So a pullback would be healthy for the stock price. So don't expect this to continue to go up forever, especially in the short term. Could be a bumpy ride. Anyway, let's now see some fundamentals. First of all, the income statement in NIO is a company that at the moment is not profitable, like basically 85% of electric vehicles company out there. So the revenues in 2019 have been 1 billion.1, and the end result, so the net income, has been a loss of 1.6 billion. So even more than basically what they make in terms of revenues. Anyway, this is kind of normal with these kind of companies, especially in their first stages. The important thing is that the gross margins and the net margins are gonna continue to increase and improve. Otherwise, it's just a waste of money, and after a while the market will realize that and the hype will eventually end. Here we can see the historical. Now the gross margin for NIO, this is 2019, so minus 16 in September 2019, and now it is slightly moving up in the last quarter, so Q2 has been to 3.29%. So as long as the business continues to produce more, usually it should scale. So the scalability of the business should bring the business to profitability. When this profitability will eventually come, we don't know that. We have the example with Tesla stock, which they are now becoming profitable after at least 10 years of trying. So it could take a long time. We see that the operating margin was still minus 80% and the net income minus 85%. So obviously the profitability as of now, it's very far away for NIO. So how do we value the stock? I did two types of valuations. The first one is a more speculative one, and it is with the price to sales ratio because the company is not profitable. So what is the first thing that we have to do to use that model is to estimate the number of deliveries, so the cars that NIO will sell in the next 4 years. Graphically, you're gonna see better. So 2020 deliveries, we see that here we have the pandemic, especially in China, where it was around here and not like us, that we are having it right now, another wave. They escaped this problem somehow. Anyway, we can see how overall the deliveries for NIO cars has been going up, and those two are the estimates for November and December. So around 5,700 vehicles in November and 6,370 vehicles for December. That will bring a total vehicle delivered for NIO in 2020 of 43,500 vehicles. So compared with 20,500 vehicles in 2019, that's a 111.3% growth. And that's very incredible in terms of vehicles delivered. This is the thing. How much will this number continue to grow over the next 4 years? So 21, 22, 23, and 24. Now, there are a lot of articles. Some says that in 2021, 100,000 vehicles in production for NIO. Some say 150,000. And then here, for example, they say that the CEO has also indicated that they can run up the production up to 300,000 units for 2022, 2023, and then who knows. One thing that we know is that Tesla is going to produce almost 2 million vehicles, the estimates, in 2024. So for NIO, obviously this will be lower, but you don't know that exactly because the Chinese, they are very famous to build things very quickly. So what I have done in my model here is to just say 2021 100,000, 2022 180,000, going to 324,000 in 2023, and then 500,000 vehicles in 2024. So I think this can be reasonable, especially considering the fact that the Chinese government is pushing a lot through innovation, and they are giving stimulus and tax benefits to EV producers. So this is something that, in my opinion, we can expect. Now, what we have to do for this model, once we have this one, we take the 2024 data, so 500,000 vehicles. And here is the thing. We have to say a cost per vehicle. I have done two scenarios over there. The first one, $43,000. The second one, $38,000. Now, obviously, we are seeing that right now NIO's vehicles are quite expensive, so more expensive than this. However, I think that if they want to go for the masses, they will push those prices lower. We saw the same with Tesla. Tesla 6 years ago, 5 years ago, was a lot more than now. So they will do the same when they scale the business. And plus, you have to consider that now the first cars that they released were a little bit to show up. So very fancy cars and very expensive. Anyway, I think that once they have shown their potential, they will eventually make cheaper products. So those two are my average cost per vehicles for NIO. Let's start with this one. We see that you just take this and you multiply it by 500,000 vehicles. So this is 2024, guys, okay? And you get total revenues of 21.5 billion. Then we saw that historically, right now, NIO is trading at a 7 price to sales ratio. And you can change it however you want. I wanted to be conservative, so I took 7. The market cap 2024 for NIO will be $150.5 billion with this cost per vehicle. Shares outstanding, NIO, considering the fact that it's not profitable, is increasing the number of shares outstanding quarter after quarter. Now we are 1.08 billion. So I said for 2024, 1.15 billion shares outstanding. You divide this by this and you get the share price in 2024, $130.43 per share. So this could be a price target for NIO in 2024. Now, we discount this back, considering that this is a very speculative valuation. I took the 12% discount rate and I have $81.4 per share today as a fair price, which is incredible considering that the stock is trading at $41. With the $38,000 cost per vehicle, we get 115.65 price target in 2024 and a fair price today of 72. So once again, brilliant. It looks very brilliant. However, now we are going to see a valuation with the PE. So the PE model, and in my opinion, it is more conservative and it makes more sense of what we can expect for real from NIO. So those one quite speculative targets. Anyway, those are the numbers, so you cannot change the numbers. They can make sense if you like to be speculative. Now let's take a look at the other one. First of all, guys, I would like to show you graphically what I mean in that growth in deliveries. So from around 20,500 in 2019 to 500,000 vehicles in 2024, you see the exponential growth, and that would be incredible. Anyway, for China, we know that China has a huge market and that they are able to do incredible things just because of the numbers, the people who lives in China. I would like to point one thing. I saw people that they were very happy because NIO is probably coming to Europe by 2021, so the European market. Anyway, as a European, I can say that, in my opinion, the best market for NIO will be always China. Why I tell you that? Because in Europe, if I have 60,000 euro to spend in a car, I will never buy a Chinese car. And with all due respect, but Europe is just the hearth of the car makers. So we have the best brilliance car in the world, okay, with Germany, BMW, Audi, and then also in Italy, where I'm from, you have whatever you want, and UK as well with a lot of things. And so we are used to these kind of brands, and believe me that if people have that kind of money, they will prefer to buy a Tesla instead of a Chinese car, okay? So just to point that out, in my opinion, the Chinese market will remain the best for NIO, where opportunities are for them. Also because the Chinese government used to, basically, if you want to buy a foreigner car in China, usually you pay almost the double price compared with Chinese vehicles. So that is the key point for them. Now let's see the other valuation here. This is a PE one. So I made just with the $43,000 per car. So just to make you understand how things works. The total revenue, you just take that and multiply by 500,000, the same as before. Now, let's suppose by 2024 with a scalability, a gross margin of 22. Now, this is lower than Tesla's, so that the one that Tesla has. Anyway, we can consider it. In my opinion, it's quite optimistic, but who knows? With the scalability, it can be done. I saw that they use a lot of robot to build cars. So if the numbers of cars produced increases, well, that can be achieved. Anyway, gross profit. So you just take the 22% of this. Then we have the BAAS, so basically their business to kind of see the batteries as a service. So that's kind of brilliant for them. They say that basically that can bring the electric vehicles costs down. So basically you pay a fee per month to have these different batteries, services and stuff instead of buying the batteries yourself with the car. And that could make sense. And so I added $500 million, so $500 million as gross profit from that particular service in 2024, guys. This is 2024. So you add those two together, you have $5.2 billion as a gross profit in total for NIO. Now, R&D, so research and development, and then the SAGA expenses, so just general expensive and management expenses, all these kind of things, I took 16%. So what you do, you have $3.44 billion in expenses, and that gives you the operating income, 1.79 billion. Then we have taxes. Now, China, corporate tax 25% on average. However, because of the government is really pushing a lot through electric vehicles, I am presuming that they will help a lot and they will get the tax situation better from these kind of companies. The Chinese government has a very strong power over the companies and over the economy. So it's not like in the US. Here, if the government decides something, well, they can really change the things. And they can destroy a company if they want. So that's it. 18%, in my opinion, it's fair for NIO. That will give us a net income of 1.46 billion. So this is the scenario when in 2024 NIO is profitable. So that's the net income. Obviously, the same shares outstanding as before, so 1 billion.15. That will give an earnings per share of 1.28. And that's not bad. So what we do, we take different P ratios. I took from 35 to the most speculative one, 70 for NIO. So obviously this is not priced as an automaker, as automakers are around 8 as a PE ratio. So this is more like a tech company like Tesla, like these kind of new things which are very highly priced by the market. And we see that the projections, so price targets in 2024, it goes from 44.65 with the 35 PE ratio to almost $90 with the 70 PE ratio. Now, obviously, you have to discount them back today. This is a more conservative model, so I took 9% discount rate, and those are the fair prices today. Depending on the P ratio, you have a 30.77 with a 35 P ratio up to a 61.54 with a 70 P ratio. So this is more reasonable to expect, in my opinion. Now, the stock is now trading very near the 50 P ratio. So the stock is now 41. So the future P ratio that the market is considering is 50. So considering that model, we can say that with a 45 P ratio, considering around 45, 46, the NIO stock today can be considered somewhat fairly priced. Should you buy NIO now? Well, if you believe in the long term, so I showed you the possible numbers of deliveries, well, then it still makes sense. However, guys, be very careful. After this kind of move, in the short term, don't be too scared if you see also a 20% pullback, because it can be absolutely normal, simply because of the interest behind the stock. And a lot of people, they don't see the long term. A lot of people, they just want short term profits, and then they go in and they go out, and that could push volatility up, because then you see movements and then people get scared and then they drop the stock. And so you can have some kind of fluctuations, but if you're believing in the long term, if you like China and the Chinese market, well, then I think it is a stock that makes sense. What are the bad sides? So the cons of NIO, in my opinion, China itself. So the bad and the good is China. Good because of the huge number of people who lives in China and the market opportunities. The bad because differently from US, it's not a transparent market. So you don't have very much of transparency as a foreigner investors. And then, as we saw with Alibaba just 2 days ago, you have a brilliant company, then the market one day decides that Jack Ma is not welcome anymore, and they can create huge problems to those brilliant companies. So Alibaba, brilliant company, but the market just went down like crazy during the last days. Look at that. And this is not because Alibaba business is not great, but this is simply because the government doesn't like Jack Ma at the moment. So with regulations is creating a lot of problem for Alibaba business. Um, so that's the problem, the real problem with Chinese companies. Anyway, guys, if you really believe it long term, it makes sense to have it in the portfolio. You go up with diversification in terms of geography, and then you are invested in a market which can continue to grow without any problems. The market is really pushing through EVs. Compared with Tesla, in my opinion, probably I like more Tesla. So bear in mind the government, and bear in mind the lack of transparencies, but in terms of growth, well, it's a kind of a great company. So when you see 400, 500 price targets, well, honestly, a more honest price target, in my opinion, can go from $90 per share to around 115 in 2024. So I hope you find this video interesting, guys, and leave me a comment below. Tell me, what do you think is a price target, proper price target for NIO? Do you own NIO? Well, just write me down below. Tell me if you own it or if you're planning to buy it. And subscribe to the channel. And as always, have a wonderful day.